What is the data really saying? Welcome to ChartWatch, where we break down a few key charts and explain the story the data is telling about the economy and long-term investment trends.
Good afternoon, everyone. Welcome to another episode of AE Wealth ChartWatch. Super excited to be spending a few minutes here. Every month, we pick out some charts that we think are interesting, and sometimes the news just sort of writes the story for you. This month, we, of course, we kicked off March with the Iran conflict, and so we thought, what better to come to you and talk about inflation, the dollar, and oil. As conflicts in the Middle East typically go, the primary area of focus that people are paying attention to is the price of oil, more specifically the Brent crude futures, which we've seen spike over the last couple of days. No surprise as they approach, 80, 85, where are we going to end up? How's it going to develop? We'll be paying attention to that and primarily concerned with shipping, efficiency. How does the logistics play out and therefore impact, the supply constraint or demand side of the business? We've already seen oil and therefore gas prices rise by 10, 20 cents, 30 cents in particular geographies. I expect that to continue. The important thing is that this then translates to the possibility of short-term spikes in inflation, short-term volatility in the dollar, gold. All of this ties to sort of one key idea that if I were an advisor, here's how I'd be explaining it to investors. And I say this all the time. It's expectations of prices, and it's the reality or realization of those expectations on prices. What do things cost? How do they move around? What's the implied volatility and risk associated with that? Are we in a risk-on environment? Are we in a risk-off environment? Is inflation about to get worse? Is that going to impact the Fed's ability to raise or lower rates? That all really matters when it comes down to how clients feel about the portfolios that they're invested in. So what you're going to see on the screen here is we see oil rising. If you looked and saw it all the way through into the beginning of March, you'd see it rising even more. Inflation hasn't moved yet. It's sort of continued to trend down, and we like that, but this could be a short-term noise for that data. The key here is the duration. How long are we going to be in this conflict, and how long is it going to impact the price of oil and therefore potentially energy costs and inflation all the way down the line? If this drags out for a prolonged period of time, it can have a material impact and make the Fed's job even more difficult when it comes to trying to decide on the path of rates going forward. And of course, the president's agenda on getting lower rates to get us back down to that 2%, 3% target over the long term. Interestingly, we've actually seen the dollar strengthen pretty significantly in the short run here as a return to maybe we're getting less tariff policy, maybe as investors perceive it, even though the effective rate is only slightly lower, given some of the Supreme Court sort of decisions there. Interestingly enough, gold also sold off today, when I'm looking at it, which is peculiar because typically gold is seen as sort of a first order safe haven trade, especially when international geopolitics start to get a little wonky. But again, could be short-term trend, could be a sustained move. It'll be interesting to see. All that being said, all of this is a result of a simple macro fact, psychologically speaking, which is people perceive a reality and then a reality either happens or it doesn't. And depending on how that works, it creates volatility in asset prices and therefore impacts client investor portfolios. So what's the rub? What would I do here if I was an advisor? I would be informing clients. I'd be being informed if I was an investor on what's happening and how it might manifest itself in my portfolio. But I also would remind myself that this is at the heart of diversification. Diversification means always saying sorry for something. I've got things that are going up. I've got things that are going down because they're all built to behave and function and succeed or fail in different types of market environments with the ultimate goal of smoothing asset-specific volatility for a long-term goal of financial wellness and creation. Stay in the plan, stay diversified, understand that these market trends as it pertains to geopolitical events typically rectify themselves in short order. Markets are typically up in the 6 to 12 months following significant geopolitical events. I currently today expect this one to be no different, but we'll just see how it all plays out, how it escalates, and how long it takes to resolve. Thanks, everyone.